Hello guys, I'm back here again with another one. In this video we are basically going to discuss more about what was on the last video, which is the head and shoulder model. Right, that is basically what we're going to look into in this video. I'm going to show you step by step of how you're going to be looking for these things, because I had some people saying that they don't know exactly where to look for these things or how to look for them. So basically it's not something too complicated. You just have to do a general analysis, and you're going to spot these things basically on the chart. You won't see them on the chart. So basically, as I said, the idea is if you want to sell or if you want to buy, you're looking for a formation like this. That is, it has to be in line with market structure. That means if the market is buying, is a buying market, you want to see something like this, right? Then what do? You participate over here, or let me say over here, anticipating what? That right shoulder. So this will be the left shoulder, the head, and the anticipated right shoulder. So that is the basic idea. And similar to selling, that is the same thing you want to do. We're looking for what? You're looking for a market structure, that is selling, then you want to spot something like this, right? Then this is left shoulder, head, and you're expecting that right shoulder over here. And remember, the criteria was the head has to make a move that broke structure to the downside. Okay, so you should have that in mind. Then you can expect the market to retrace into the zone, and then you play ball. So let's see how you can look for these things on the chart, guys. So basically, how you just start, just do a general analysis, and top-down analysis starts from where? The monthly time frame, right? So the idea now, from looking at what we have on the monthly time frame, you can see what the market is doing. Basically, the market is doing what? It's buying, right? The market has been buying so far for 6-7 months, we can say, or 5 months. The market has been buying. So now looking at this, our idea is buy bias. So going to the lower time frames, we can have an idea saying that possibly what we just want to do is buy, right? So let's go to the weekly. On the weekly, this is what we have. You can see we have this recent structure over here, market moving up. And this was the recent zone that retraced and broke structure to the upside, impulsively. And so we can just decide to say, okay, we want to play ball if the market comes here. That is the basic idea, right? So, but that is not all. Remember, it's a top-down analysis. We can change or refine our zones as we are going to the lower time frames, right? So on the daily time frame, let's go to the daily time frame. You can see on the daily time frame, we have this long move over here, and we have some other blocks that have been breaking structure on the daily, So the basic idea now over here is this zone is quite far. You can actually move and concentrate on this zone or this zone. Now, you should understand, you can actually mark zones on the higher time frame, if it's a line with market structure. If you want to mark your zone, you can mark the recent order block you're seeing. Why? The issue with these order blocks you have to understand is, the higher the time frame, the higher the probability of that order block is to hold, as far as it's in line with market structure. So you should capture this, my entire statement. The higher the time frame the order block is, the higher the probable it is to hold, as far as it's in line with market structure. So you can just resort to marking the recent order block that we have, which is here, right? And you see, if the market comes into this zone, you want to play ball. That is, you want to buy, right? This is how it looks over here, So before we go to the H4 time frame, I just want you guys to see something a little bit. What happened over here? The market dipped into this zone and moved up, right? The trace moved up, right? So let's go to the H4 time frame and let's see this clearly. Let me show you what I want to explain clearly. Why is the chart loading? All right. So this is what we have, on the daily time frame. And you can see we have zones, we have other blocks, we can spot them, right? So what do we have over here? Let's look at the recent structure. The market is doing what? Is buying, right? Then what happened? We had this retracement, and then the market bought. Now, I want you guys to just see the basic idea. Remember, the model we are discussing over here is the head and shoulder pattern model. How to use these things to take trades. As I said, this is a very high probability model for you to take a trade, not only synthetic indices, be it forex or cryptocurrency. This is one of the biggest model I'm going to share on this YouTube channel. With time, I'm going to bring more information which are going to make this strategy better for you, with regards to this exact model. This is something that's very consistent on the chart. You can find these things a couple of times on the week. So the basic idea over here, what I'm trying to explain now is, look at what we have over here. The market was buying, right? We know it's a buying market. What happened? Market bought after tapping into this other block, right? Then what? You will have waited over here, maybe expecting to take a buy. So now what I want you to understand is, look at what happened over here, guys. The market tapped into the zone. It did not tap into the order block fully, but it went down and impulsively broke structure to the upside. Initially, yes, on a normal day, you would wait here, maybe anticipating this zone as liquidity, right? You can call this, what do you even call it? Swing low liquidity, right? In SMC or something like that. Yeah, so you could have expected it to be this, and you wait over here, but the market did not come back. So the reason the market did not come back, what happened? Look at what we have. What do you see over here? Before I speak, I want you to pause the video, and I want you to just see what happened over here when the market retraced. What can you see over here? I'll give you some seconds to spot it. Pause the video. Some people will never pause the video. So the basic idea of what I want to show you is, look at what we have. The market broke structure and then it tapped into the zone. But it didn't tap this into this zone anyhow. It took out some lows over here. Right? Now what is this? Left shoulder, head. Left shoulder, head. If you can't spot it, let's go to the line chart. The line chart will always give you sometimes clear explanation of what you want to see. Look at what we have. Head, broke structure. Then you can expect what? Right shoulder over here. And did we get that right shoulder? We are about to find out. What happened after this head was created and broke structure impulsively? What do you have? Look at what happened. You want to mark, the recent zone that caused the break, right? Which is the last selling order block before the buying order block. Then what do we have? Let me just mark the zone so that you see. This is the zone that maybe you will have marked out to play ball from. Can you see it? Then what happened? Left shoulder, head. Your expected right shoulder tapped into this other block, and what? It moved. Head and shoulder pattern. This is how it forms on the chart. So you have to learn how to spot these things. It's very, very, very important, right? So now these things form frequently on the chart, just as I said. To an extent, you're going to spot them a couple of times, on different pairs weekly. So what do we have again after this head and shoulder pattern? You could have seen this beforehand, since when the market was here. That is before the retracement. You'll have seen this low, which is the left shoulder, the head, and you could have expected, okay, maybe the market wants to come and tap into the zone and do what? And continue buying, giving you that head and shoulder pattern. One. What happened after the market came back into the zone? Look at what happened. Broke structure again. What do you have over here? Left shoulder, head. And you expect what? right shoulder in this zone, in this area. You mark what? The last order block that caused that buy movement, the last candle, sell candle that caused that the last candle, so the last sell candle, sorry, before the buying candles, right? What happened? You mark it. hmm? Your left shoulder, the head over here, which broke structure, and what happened? Your right shoulder movement. Huh? The market bought another head and shoulder pattern, which you could have taken advantage of. That means you would have spotted it beforehand. As I said, you can go to the line chart. The line chart will give you good view of what is happening. Right? Then you expected that right shoulder, and then left head as good as it is. What do we have again? I think that's the basic idea, right? So you could have, let's say, waited to take a trade over here, right? And then what happened? The market bought from here, right? So let's go to the lower time frame again. I want to show you something, you know, possibly another head and shoulder pattern formed. Look at this. Then you will have waited over here, and what happened? You might not have spotted this. Let us go to the line chart. This was the low head. The right shoulder did not come in deep because on the candlestick chart it was just a wick. So usually when on the line chart, if a wick tapped into the zone and then it wicked up and closed something like this, you won't see it on the line chart. Okay, the line chart basically works with the bodies of the candles, so that is why. But look at the idea I'm trying to pass. Left shoulder, head, and you expect what? That right shoulder somewhere here. Did we get the right shoulder? Hell yes, we did. Look at it. The right shoulder formed a little bit up. Why? Because you marked this last order block over here, and it just tapped top of the order block and bought. Let's go to the H1 so that we can see this clearly over here. On the H1, look at what we have. Can you see it on the H1? Left shoulder, head, which broke structure, right? And then what? Right shoulder. These things form frequently. You just have to know how to spot these things, on the chart. So that is the basic idea with what we have over here. And for me, basically for today's trade, what I have for today's trade is also another head and shoulder pattern. Look at what the daily candle is doing. The daily candle we know is buying. Can you see this? Right? It's buying. Right? And we know the market structure is a buying market structure. What do we have? Let's go and see what we have over here. This is the last order block for the day. If there was a head and shoulder pattern on the lower time frame, we can take advantage of it. What do we do? Go to the H1. What do you have over here? You can expect what? This is the basic idea with what we have, guys. Left shoulder, head, expected right shoulder over here. So that is just it about this head and shoulder pattern stuff. So there's nothing much about it. It's not too complicated. You just have to backtest and see how to spot these things again and again and again on the chart. So basically, let me see what we have again. I'm on a trade also with the head and shoulder. Which pair is that? Okay, guys, look at what we have over here. I don't want to waste too much time. This is also another head and shoulder pattern that I spotted and I wanted to take advantage of. You're going to have to pardon me. I'm going to do a top-down analysis, but you have to shine your eye over here, because when we go to the higher time frame, all these drawings are going to make the chart not too clear. So let's go to the monthly time frame. On the monthly time frame, what do we have? Basic idea: market is selling. I don't want to stay long. Okay, we know the market is selling, right? What do? You go to the weekly time frame, look for a recent order block. There's nothing much. We only have this. You You can expect the market maybe to retreat into here and sell, but it's not clear. Let's go to the daily time frame and see what we have. On the daily time frame, what do we have? Nothing much also. This is the recent order block that you have, right? And the market tapped into that order block and rejected. This green wick rejected, heavy rejection, right? Then what do? You go to the H4 or H1, So on the H4 time frame, we know that this wick, which is on the higher time frame, let me just mark the entire zone on the daily. This over here, we know it's what? It's a higher time frame order block. On the H4 time frame, where is that higher time frame order block? This is where the market tapped into the zone and then started selling. What do we have here? Left shoulder, head, and what? Expected right shoulder. This is where we are at the moment. This is where we are at the moment. So I'm expecting the market to do well, sell, and take us to this point. That is the basic idea with what we have over here. So this video, I did not want to make it a long one. I hope this information will be of good benefit to you. So that's just the basic idea, with this video. So that's it for me today, guys. See you. Today is Thursday. I am going to see you guys on probably Sunday by God's grace. All right. So that's just what I have for you guys today. Have a good one.